Back to another video. Today we're going to be covering a little bit about inducement. I've had a lot of inquiries into inducement, how to spot it, and I've got a few little tips of my own that could help you guys spot inducement and not be susceptible to any traps that may occur. So inducement, I'm not going to go into the proper definition of it, but see inducement as like a trap for impatient traders. Okay, so what I mean by that is, so I've got this Euro-USD swing position mapped out. I'm just waiting for a tag. Now, what I could have done here, because if we remove that, we've got a couple of zones in this sort of leg that we could go long from. So we've got this area right here, because that's a valid demand, and we just have this area down here as well. Okay, so this is a classic inducement trap. So if we go on to the hourly, so obviously if you want to refine that to the hourly, you've got that position there like that, and then you've got this position here like that. So we could just cover this whole section here. So we've got two areas that we could go long from. Now, the area that could potentially be used as inducement is this zone right here. So why that is because, let's say, for example, I'm definitely not the only one eyeing up this swing here, but if we get rid of that, so if traders are impatient, they'll be like, you know what, that is approaching this zone, I'm going to go from here, and chances are their stop loss will be at the bottom of that zone, and then they'll target the high or something like that. So you've got millions of people doing this, and what they don't realize, if they have a bit of patience, there is a bottom zone here that, if we have a look from this demand got mitigated here, this demand got mitigated by that. So chances are this demand is going to get mitigated by this, okay? So what they don't realize is their stop loss is sitting right in this little puddle here, this little gap. And this is potentially what the banks will target. So they'll push price down into this demand. Let me do a little sketch here. So they'll push price down into this demand. They might get an initial reaction, something like that, before starting to push it down, take them out, tag us in, maybe move a little bit deeper into the zone before shooting off. So something like that could potentially happen. Now, the reason this is called inducement is because it is basically a trap set up by the big players in the market to get people to enter way early, way earlier than they should do, so they can stop them out and take their money. Because obviously, from this perspective, this does look like a really nice zone to go from. And people, obviously, not everyone knows about risk management, so they're probably putting on stupid lot sizes, stupid amounts of money on this move. So there's billions of quid in here that is waiting to be swept, because I guarantee there's already millions of people with buy orders at this area. So it's my understanding that the banks will probably target that, give them like an initial boost, and then take them out. Now, saying that, if you've got inducement, it doesn't mean it's always going to be swept. Okay, so we could actually just see, that sketch, but no push through the zone. So you could see a move up like that, and those traders would win. But all I'm basically saying from this video is, when you see inducement, there's no harm in going from the zone below it. Okay, just a little bit more patience, because the worst that can happen is, yes, okay, it might shoot through both zones, but you played it safe. Okay, if you get taken out in this zone, let's say you entered here, and you knew that this zone was below, it's going to really kick you in the teeth, because you'll be like, you know what, I knew that was going to happen, and I still did it. Yeah, and it's a horrible feeling, but it's just applying a little bit more discipline, a little bit more patience into your trading system. But obviously, if you get taken out from this zone, you can say, look, you know what, I played it safe, it still took me out, price just wasn't on my side. Okay, and obviously that happens too. There's no, there's nothing wrong with that either. But basically, that is what inducement is. It's there to trap you. For example, if you're going in for trades, normally you'd have a couple of zones to enter from. And it's going to want you to enter from the earliest zone. so it can potentially trap you, take you out before mitigating a higher zone and move down. So you'll see it everywhere in the market if you go back and sort of back test price. And what we can see here is we've got another one. Look, so another example is we've got this leg here, and we've got this zone right here, which price actually just about wicked in. But you also have this zone in here which pushed a new high. So you've got impatient traders in there entering at this point. Let's replay it so it's a little bit clearer. So you've got, both these zones look really, really good. But you've got impatient traders in here entering like that, and their stop loss is within this sort of gap here, and that's the target for the banks potentially. Okay, obviously we know that in this instance it did actually come down and take out mitigate the lower zone, but this is what they're targeting in here. This is what the banks will be targeting, anything in here, because obviously you've got people with the tight stops trying to get the big R, people with the conservative stops, maybe trying to play it a little bit safer, but all their stop losses are within this region, and obviously, like I said, there's billions of pounds in there for the banks to take. So a little bit more patience would have been, I'm going to take this zone, maybe cover that low there, and I'm just going to take it in to the high or something like that, yeah. And obviously, as you saw, very, very nice move. But yeah, that is sort of the basic concept of inducement. I didn't want to use this video to confusing myself now. Didn't want to use this video to confuse you guys. I just wanted to make it so you sort of understood a little bit more about what inducement is and how the banks use it to trick you and trap you, and just a simple sort of trick to be able to avoid it. And that is just basically to avoid inducement. You just got to have a little bit more patience, be a little bit more conservative in your positions, and just take it nice and easy. All right, there's no rush, guys. There really is no rush. So just go away and backtest this. Go and have a look at some inducement traps. Apply it to your own system. If you trade supply and demand, definitely go and check out some zones, because obviously you got zones everywhere, and majority of them are used as inducement. So go and check that out. Let me know how it goes. Drop a comment down below. If you can like the video, that'd be fantastic. If you're new, please subscribe. Be very appreciative of that. But until then, guys, have a fantastic week. Have a lovely Tuesday, and I'll catch you in the next video.